Canada's inflation rate is down to 1.7% in April from 2.3% in March. The drop driven by lower energy prices, and there's one major policy reason behind it all.
The largest reason for the drop in inflation was the elimination of the carbon tax. That led to a drop in gasoline prices, but also home heating and other energy components of what is behind the inflation calculation. And so that 0.6 percentage point drop, that is basically entirely because of the carbon tax.
Despite the decline in overall inflation, some core measures are actually up, above the Bank of Canada's targets. If you remove energy prices and the impact of the carbon tax removal from the equation, inflation actually rose 0.4% in April. One big factor keeping the rate up: grocery prices, affecting lots of Calgarians in need, according to this founder of multiple food-serving nonprofits.
What they're saying is that they've had to make a lot of choices and sacrifice. So back in the day when they used to buy a bit more protein, they're now swapping that just for whatever's the lowest cost veggie, and keeping the meals more vegetarian.
Those food price frustrations are felt by folks at the grocery store too.
Very more aware of what I'm buying now. I'm not just throwing stuff in because I have to make that budget and I have to stick to that budget.
You pay $10 or $11 to get a little basket of strawberries. Doesn't go very far if you had a family of four.
As for how the country's latest inflation rate could affect the central bank's interest rate, some economists aren't reading too much into it.
These policy changes that affect the rate of inflation, they will have zero effect on what the Bank of Canada chooses at its next interest rate announcement. I think there is some indication that price pressures might be mounting, and I think that should lead us to expect a little bit of caution on the part of the Bank of Canada and not lowering rates too quickly.
The Bank of Canada's next interest rate decision is June 4th. Acton, Clarkin, CBC News, Calgary.